In this video, we're going to talk over why most business owners are overpaying on taxes and don't even know what's going on. There's a really simple way around this, and that is by creating a private foundation. You can save the most amount of money on taxes by using this one structure alone. Again, you have to be proactive rather than reactive if you are going to do something like this. And it does involve improving your team. So if you had someone like Lionel Messi working for you, you're going to increase the average of your team. Everyone's going to perform better, and that ultimately will equate to more tax savings for you, so you can use that money in better places than funding the government. Right. The current situation is that you are at high risk right now. You are overpaying on your taxes every single year. So that means money is coming out of your pocket, away from your family, away from your employees, and away from everything that you want to do. And it's up to you to fix this, right? No one else is going to fix this for you. You're probably too dependent on your CPA, regardless of how good or bad a relationship you may have with them. You're probably not doing enough planning and reviews and being proactive about reducing that taxes. And for certain, you have the wrong entity structure. I'm not talking specifically about if you have an LLC or an S corp. I'm on about additional overall structures for you and your family to be able to reduce taxes and get down to a single digit tax rate. Yes, I said that. You can get down to a single digit tax rate if you are structured in the right way. So that is a big part of everything that we do, is to make sure that the right person has the right overall structure so you can get down to those single digit tax rates. The complications, there's a lot of things going on, right? Nobody likes taxes. It is complicated, it is overwhelming. But the tax code favors the prepared, not the average. So if you look at yourself and you reflect and you're like, are you average when it comes to taxes, loopholes, and savings in general? Or are you prepared? Are you on top of things? Do you know what's going on? You know what changes are coming? Are you proactive or are you reactive? Because that will tell you whether you're prepared or whether you're average. And if you're average, you are definitely wasting a lot of money every single year. The IRS isn't going to tell you what's missing, just like you can see on the jigsaw piece, right? You've got to figure that out yourself. Furthermore, your CPA unfortunately does not work for you either. Their job isn't to save you money on taxes like you have probably been led to believe. Their job is to file and prepare your tax return so that you go ahead and make that payment. So they technically work for the government. They don't work for you. So if you think they do, you've got to reframe that, because regardless of if they save you $1,000 or $1,000,000, they are not getting paid any more or less. So you tell me, are they incentivized to work that extra to save you money to not then get compensated for it? The answer is no. That's why you need a tax strategist, not a CPA. This is another person that should sit on your team and help you identify strategies and structures to improve your family legacy, right? Ultimately, saving you more money so you can reinvest it and grow that family legacy. Simplicity creates overpayments. If you've just got one LLC or one S Corp going directly from you, then I can already guarantee you are overpaying on taxes and save you at least 30% without even sweating. That's how simple it is, because you have been overpaying, and simplicity is not your friend, unfortunately. So, what do? The resolutions. When we look at learning things, I always model what the best in the business are doing, right? So taxes are no different to any business skill or anything out there. So what are the elites doing? What are the billionaires doing? What are the family offices doing? Because we should just copy that, right? So when we look at the likes of Elon Musk, Jeff Bezos, and Mark Zuckerberg, they all have private foundations. They may have public ones too, but they definitely have private ones, right? And we can follow the money. So we can look at their tax returns, and we can see that from their leaked tax returns from ProPublica a couple of years back, that all three of these guys are in single digit tax rates. Why is that? A multitude of reasons, but one of them is that they take very low W 2 salaries. They get paid in stocks, they borrow against their stocks, and then they donate whatever they have into private foundations, which they fully control. Now, nobody really talks about that last piece because it is the kind of unwritten rule that the elites use, but don't want to really talk about. But you can trace a lot of this back through the leaked tax returns of these guys, right? And again, just copy what they do, what family offices do. Bill Gates, Warren Buffett, all these guys, they've all been doing this for a very long time. More recently, Warren Buffett has just donated $9 billion. That's right, 9 billion with a B, to his kids, giving them 3 billion each, all completely tax free because he's donated it from his foundation and he's donated it to their foundation. So now, as we're sitting here in 2025, the estate planning tax threshold is a measly 12 million. It's about to go down, but it's 12 million right now. How much of that 9 billion would he have had to pay in taxes? Up to 40% of it if he was doing things the traditional way. But as we know, these billionaires and family offices are a lot smarter than most people and have teams and armies of people working for them. So he's paid zero inheritance tax on passing that money along to his kids, all because he knows how to work the system. And that system is the private foundation system. What if you could legally pay single digit tax rates and still control your assets? What if that was possible for you? What difference would that make in your life? How would it change if you saved three or 400,000 or $500,000 a year that you would have been paid in taxes, but now you can redeploy that to charities, to family, to vacations, to the reinvest in the business, start a new business. There's a million things that you could do better with that money than funding the government, which has not passed an audit in the last 8 years and runs at a $37 trillion deficit as we sit here recording this video, right? You tell me. Private foundations allow you to deduct up to 30% of your income, totally avoid capital gains tax, and reclaim control over the assets without giving them away. So that's why everyone is raving about family foundations, just not publicly, just not in the circles that you're in, but in the right circles at the family office and the elite billionaire level. They are all in this game, and you need to be too, right? So let's give you a case study of Dave. Dave sold his business for $8 million. And before he became one of our clients, his CPA said he'd have just short of a $3 million capital gains hit. Instead of him paying $3 million in capital gains, what we did is we donated the stock of his company into a private foundation that he fully controlled, and that totally eliminated his capital gains, right? Then it went one step further because now this $3 million can get reinvested time and time again. It can appreciate and will forever, right? So that created an estimated $10 million in lifetime tax savings for Dave and his family. And now he's set for life because he's liquidated. He's saved $3 million on top of his sale, which was life changing for him. On top of that, right? Just getting the sale. People selling businesses is very hard, but to get it and then save that additional 33 to 38%, depending on which state you're in, is life changing as well. So we were really happy that we were able to show him how to do this, because if he didn't reach out to us, or if he didn't get referred into us, he would have paid $3 million. Thankfully, his CPA was smart enough, or he came across us to refer us in, and we got this set up before that sale happened. Well, if billionaires are doing this, why aren't you, right? So private foundations aren't just for the ultra wealthy. We get this question all the time, right? It's not for me. I'm not rich enough. How rich do you need to be? And the answer is, if you've got a business that's doing over $5 million a year, or if you're paying taxes over $500,000 a year, then you can reach out to a specialist firm like ours or someone else. It doesn't matter. and set up a private foundation. The key is it's got to be a strategic foundation, because you can set up a foundation, the intent and the purpose is always going to be charitable first, and you can have control over it. But if you don't know how to use it efficiently and effectively, then there's no point having it. It's like think of a car. If you've got a Ferrari on the driveway, a beautiful red Ferrari, but it's a stick shift and you don't know how to drive stick, what is the point of having that car, right? You got to know how to use the vehicle properly to get the most out of the vehicle. And that's exactly where strategic giving comes in. And it's all based around foundations, specifically private foundations. And again, let's get into a quick case study. So one of our clients, obviously we've changed the name here, but Emily runs a 7-figure coaching business, and she regularly donates $900,000 a year to her foundation. She's dropped her taxable income, right? Aggregated gross income is AGI, other similar to net profit, think of it like that, by 30%, right? It's a big drop. Redirected 1.1 in annual wealth from her taxes into legacy planning. The beauty about this is she can then send that 30% over into the foundation, gets the tax deduction on her personal taxes, but then also gets to reinvest that money in the name of the foundation, which grows capital gains tax free. So you get 2 bites of the cherry and then multiple bites as it compounds and grows year over year, because then you're in a tax exempt state. Let's go over the laws. I don't know what's going on with this, but the laws are changing all the time, right? So charitable deductions could be getting capped. The tax laws are fast changing, especially with Trump in power right now, and it's not in your favor, because in 2026, the tax exemptions are actually going to go down. They're dropping by 50%. Right now, they're around 12.5, 13 million. They are going down back to 6, 7 million is what they've said. So that will impact millions more people, because at a $12 million plus level of asset value, there's not as many as half of that, right? So there's millions more people that are going to be affected by this. And again, another one is the step up in basis might vanish. So again, depreciation, step up, they're trying to crunch you, charitable deductions getting capped. There's so many different things coming down the pipeline, especially with this big beautiful bill and the others that he's trying to push through. And one of those things is he is going to try and squeeze on taxes. So we got to get ahead of the curve, and we got to act fast to get these things set up ahead of time so that we can maneuver freely. Then a case study on Dr. Brown. He thought he was 58, so he was getting on in years. Thought he had plenty of time, but when he saw the future tax hit on a $12 million estate, he moved half of it, or just less than half of it, into a private foundation. And again, you don't have to move everything into this. That's the beauty of the foundation. You can donate pieces, different types of assets in as well. That allowed him to, one, reduce the target on his back, because if you don't own the assets in your name, they are then protected from lawsuits, especially with doctors. They get lawsuits all the time for no reason at all. So having the assets out of your name and in a foundation also gives you a really advanced level of asset protection. Again, legacy, now the 5 million goes into a tax exempt entity so that his kids can utilize it and grow that, and hopefully make it into a lot more for the next generations, which would be Dr. Brown's grandkids, right? So legacy play, as well as getting a $5 million tax deduction that he can use over the next 5 years. So he's not limited just to using that in 1 year. He can use that $5 million deduction over the next 5 years. So if you're paying over 500,000 in taxes, that's not your revenue, that's your tax liability. At the end of the day, if you're cutting a check to Uncle Sam for over 500,000 in taxes, then you're simply not tax efficient. I can almost guarantee you are burning money, and you need to do something about it, right? Because if you don't, you just keep funding the government that's going to keep wasting your hard-earned money, and I'm sure you want to do more than just waste that cash. You're overpaying every single year if your tax bill is that high. I can guarantee it because I just know it that well. you're exposed and you need to create a structure and you need to improve your team in order to get down to single digit tax rates. Whether that's working with us or working with anyone else, it doesn't really matter. This isn't about us, it's about you. You need to get a better team in place, and you do that by creating a plan and seeing where the holes are, because everybody is different. Some people might have this incorporated but don't have other things, right? You might want to be more aggressive, you might want to be more lenient. Everyone has a different appetite, and that's perfectly fine. But the key is to not overpay on taxes, right? Next steps. How does this work? Audit your current tax strategy. When was the last time you got your tax return, you sent it to a new CPA or a different CPA and said, hey, can you review this and see where the holes are? Because that CPA will see different things to your current CPA. One of the things that we have is a free school community, and we have the top 50 loopholes that everyone should be using. And what I recommend is that you download that PDF, you email it to your CPA, and you ask them, hey, which of these 50 have we used, and why haven't we used the rest? And see if you even get a reply, let alone a justification, because that will tell you how much that CPA is or is not working for you. And once you do that, you'll be able to identify any hidden overpayments because another set of eyes has reviewed it. And then once you know where the gaps are, you can then build a roadmap that will show you how to fill those holes and effectively create a foundation structure that will save you and your family millions over the lifetime of it. Let me tell you a little bit about us. I am Casey Chauhan, founder of Together CFO. I've been featured pretty much everywhere from Forbes. We contract with the government, Fox, CNBC, ABC, NSBC, the Entrepreneurs Organization, YPO, you name it. I've probably spoken on their stages, if not a member of that organization as well. I've helped over 1,200 business owners, and we've saved them over $250 million in taxes. I think that's an old number. It's a lot higher than that right now, but we've saved them a lot of money. That's bottom line, and we do it all through IRS approved structures, and we create strategic giving blueprints. Right, so this is something custom for you, with tax strategies tailored to your needs. And it's a full white glove service. So phase one is understanding what your needs actually are, and then creating options for you to save that money. So we do all that in-house. And it's a full white glove experience. We only work with high net worth individuals. If you've got on the lowest end $5 million business or a 500K tax liability, then it makes sense to have a conversation. So if you want to stop overpaying on taxes, feel free to book a free tax consultation with our team. You can scan that code right there. Or if you are more old school, feel free to give us a call and speak to a human directly. None of this AI BS. And then if you would like to email us, feel free. We are at support@togethercfo.com. I hope this has helped. And do let us know if you have any questions. We are here to support you however we can.